Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, feed fanatics and grain geeks. Welcome to another edition of the Grain Feed, brought to you by EverAg. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping livestock feeders and dairy farmers manage risk. I'm Phil Plourd, filling in for Jim Matthews, who is on assignment this week. That's the bad news. The good news is that we have two exceptional panelists on board for the ride today. First, from our Platteville, Wisconsin office, we have Brandon Weigel, who works with a variety of clients on grain and feed issues, and as best I can tell, finished in second place in the EverAg Fantasy Football League Division B this year. We can have a discussion later about who finished in first. From our Chicago office, we have Ryan Yonkman, one of the leaders of our dairy producer risk management team. Hey, Ryan.
Hey, Phil, Brandon, thanks for having me.
Paige, let's go ahead and timestamp this episode. It's about 12:30 p.m. Central Time on Thursday, January 4th, 2024. In our markets today, we have nearby corn trading at about $4.66 per bushel, down 8 cents from last week. Soybeans have slipped below $13 per bushel, with last trades in the $12.60 per bushel area, down 43 cents from last week. Soybean meal is at $380 per ton, down $9. Turning to milk, Class 3 milk is at $16.33 per hundredweight on the 6-month strip, down 14 cents, while Class 4 is at $19.32, up 14 cents. All right, guys, well, welcome. Things are typically quiet at this time of the year, another holiday-shortened week. Not really many fireworks in the marketplace. Seinfeld did a great job with a show about nothing. Hopefully we can do the same here today. Not a lot to talk about. But Brandon, let's just sort of set the stage as 2024 gets underway. What are we looking at in terms of the grain and feed markets? What's got your attention?
Yeah, absolutely. So as we kind of look out to 2024 here, we've had a pretty quiet start to the year on the corn side of things, but protein has been a lot more volatile. And we've started to see some rainfall come in fairly significant stretches down in Brazil, which has been a big concern up until this point. So as we kind of look down the road at 2024, we're really looking at more abundant supplies of corn for the coming year, while soybeans still remain very tight. And that market is going to be very much in flux just based on South American weather here over the next several months.
So, Brandon, I listened to some grain analysts, and I think that there's some debate. Is the crop in Brazil 150 million metric tons, 160 million? But those are all sort of in the realm of rounding errors, right? I mean, it seems like Brazil is on track for a good crop. That wasn't assured 6 or 8 weeks ago. The markets, I'm guessing, are feeling a little bit better about that.
Yeah, we're definitely seeing some relief there. A little bit of, risk premium being taken out of this protein market. The fact that there's a little bit more optimism around their crop now that it's in the ground. It seems like not only is Brazil now catching some rainfall, but some of the crop conditions like in Argentina are off to some of the best starts that they've had in several years, frankly. So it's still really early, which is why there's still opportunity for this market to get away from us to the top side. But this recent break definitely has producers in both the dairy and livestock spaces feeling optimistic about their protein needs.
And what about corn?
Yeah, so that has definitely been a lot more quiet. We continue to see pressure on corn, and really as we walk into this year, we've got a WASDE report coming up here on January 12th. That's our big January WASDE where we'll get those final yield numbers, and it's also our quarterly stocks report. There are initial expectations there that we do see corn ending stocks being raised from where they are currently already at. Now, I would say that typically when we have a balance sheet on corn that is in the realm of 2 billion bushels roughly for that carryout number, when we see ending stocks come in around 14 to 15%, which is where they're expected at for this year, we typically have corn prices that are even at a discount to where we're at today. So we really have to be cognizant of what that means here moving forward. We've already seen prices that are a lot better from the purchasing perspective than what we've seen the last several years. So we still need to be cognizant of these levels, make sure that we're being prudent to manage our risk around these prices. But we definitely think there could be room for this thing to work more so in our favor from the purchasing standpoint as we move throughout the year.
Yeah, you don't want feeders to get their hopes up too high, but when you look at history and you look at that kind of stocks to use ratio, you're talking about 360, 370, 380 corn, not 450, 475 corn, right? And if I understand correctly, in a way, the elevated soybean market is helping prop up corn a little bit. Is that true?
Yeah, that definitely has been the case basically all of the last half of 2023. That corn to soybean ratio that we talk about so often, it generally never strays more from that call it 2.8 to 3 times the price of corn. We've really stretched that up here this fall. And yeah, so far that strength in soybeans all fall has somewhat seemed to keep corn maybe artificially inflated, one could say.
So, Ryan, not to get out ahead of ourselves, but if we saw corn prices down 30, 40, 50 cents per bushel, I'm guessing that would be welcomed by dairy farmers who have had a bit of a rough go of it again here as 2023 came to an end and 2024 gets underway. What are you seeing from a dairy perspective?
Yeah, I mean, at this point in time, we'll definitely take any break we can get on the cost side. We've talked about it in earlier episodes. Cost of production going into 2024, I don't think have brought near the relief that the industry or even us as dairies were expecting. We're still seeing costs. The reality is they're still on the high side. And with the current situation on milk price, especially like you said, if you live in cheese country, you're hoping and praying for a rally in milk, or we got to find a way to save some coin on the cost side. So this break in protein has been nice. Any further break in corn will be helpful. But at the end of the day, Phil, I think we're still talking a lot of dairies that need $18 or better to make this thing work. And when you look across Q1 and even Q2, frankly, that's not there.
Yeah, I mean, $19.30 class 4 milk on the forward curve is fun, but there just isn't that much of it out there in terms of farmer paychecks, right?
Yeah, that's exactly right. There's parts of this country where we know regionally profitability, there's some major gaps, right? Or said simply, the 3-4 spread, that spread has been trading $3 to $5 wide. That creates significant differences in profitability around the country, depending on where your milk is moving.
So what are we telling dairy producers that are, in the Midwest? It seems like, things were okay for a while, felt like we were rounding the corner. And then the last 3-4 weeks of 2023 were a real kick in the pants for class 3. We got some coverage on maybe for early 2024. How are we talking to dairies and what are we talking about going forward?
Yeah, so if you look at, Jan to June here, as far as new advice, we're not really giving any. At this point, yes, there's always risk to the downside. If you got to do something, you guys know the answer. It's buy puts or DRP, but hopefully you're already in front of it. The look was never great or obvious, but those that did get in front of it, we're glad we've got it. But you're talking a Jan to June curve trading, what you said, around 1670. That's new lows for the year. That is sub break even. And like I said, it is new lows for the year. You never feel great about chasing that, especially when our cheese market has spent over 2 months now, around that $1.50 area. We spent the last few weeks in the low 140s, while the European prices have really actually stayed fairly elevated in the 180s. The US looks set up and teed up. We're certainly the cheapest cheese in the world. This would not, in our eyes, be a great time to be chasing this thing lower. You could actually make the case that, hey, if you've got hedges in the money, you might look to roll those down, protect gains. I don't think it's easy to get bullish right now. I do think it's really hard to look at a $1.40 cheese and say there's a lot more downside to this thing. It's historically been a cleanout price, hasn't it, Phil, when you look backwards?
Yeah, I mean, it's the old cliche that low prices, cure low prices. And I would say that from the demand side of things, even though there's a lot of questions, I would think that at 140 something type cheese, we are certainly attractive to the world. Now, New Zealand's got some cheese too. Global demand isn't so great. And maybe that's why we've had to smash this thing lower to kind of jump up and down and say, hey, pick us. But I think here in the 140s to 150s, we're going to get some business on the export side. We've heard some whispers of that over the past couple of weeks. So I think, we can be optimistic about getting off the bottom. How far we can go, I don't know. But the really scary thing from a dairy farmer perspective too is, we're talking about $16 futures. That's almost like a $2 premium to the spot, right? I mean, we got to get going here even to make that true, right?
And that's kind of the catch-22 to this. It's like, okay, yeah, hey, $1.40 is cheap and probably doesn't have a lot of downside, but the curve continues. Even though Jan to June is into new lows for the year, the curve continues to have a massive carry. April through June trading around $1.79 average, even into March, $1.65. So yeah, spot has to rally just to make that be true. And we know those prices are low. So it really, I guess, in a way, the curve is opportunistic dairyman and that we have got a carry to hedge into. The problem is that carry isn't maybe quite where we all want it. It's where we think we can protect profitability.
It's interesting too, Ryan. I was talking to an end user yesterday and they asked the question of, well, all right, so we have a $1.45 cheese today. Can it really get to 180 anytime soon? And again, I'm not making any predictions, but when you look at what happened in July, when we caught a bunch of exports, we went from 145, 150 to 190, like boom. So, I mean, we can see kind of a quick correction, but the trick is, no one has gifted us with the timing of that, right? I mean, if you could tell us the day, we might be able to work around that.
That's absolutely right. Today we saw no offers, no trade in spot cheese is at the beginning of it. Who knows? We'll see. But we do know if we get any type of rally like that, those have to be viewed as opportunities in this current kind of demand bearish environment. So we're only certainly hoping for those types of opportunities going forward.
Feels like we're playing defense. Brandon, we didn't talk about soybean meal. Down under $400. Jim likes to call it that stubborn byproduct. Spent a lot of time over $400 in 2023. So, Brandon, one of our more popular visuals at EverAg Insights is our map of the biodiesel crushing facilities that are being built all over the country or all over the Midwest. There's a lot of belief that we're going to put a lot of soybeans into those facilities. The demand is for the oil. The meal is the byproduct. How optimistic can we be from a dairy farmer perspective that meal prices gradually or even suddenly move lower over the course of 2024?
I think that there is room to be optimistic there, Phil. Not just as we move into 2024, it probably even more so starts to come beyond 2024 because it takes time to get these facilities up and moving. It's not going to happen overnight, but you're spot on with the fact that we continue to crush soybeans here in the U.S. at a record pace. We just set another record in the month of November. We were over 200 million bushels of soybeans crushed. So as we continue to see these facilities really ramp up in the coming years, that's something we do have to be watching for because as they do crush more soybeans for that oil, like you said, Phil, we are going to see meal become more abundant as that is the byproduct of that crush.
Thanks, Brandon. Ryan, over the next 2 to 4 weeks, is there any particular indicator, anything that you're keenly focused on for clues about what's next in the dairy side of things?
I think to stay focused on cheese, it's really going to be, do we start to see some of the sell side on the exchange lighten up in regard to spot loads being available? Do we start to hear and see that we actually got some exports off? As you mentioned in the past, when we see that happen, that CME spot offer tends to go away. We are price competitive. I really want to watch close over the coming weeks if, hey, a month in the 140s was enough to do the trick.
Brandon, what about you? What key indicator, what key market metric are you looking at?
Yeah, so it's going to be really two things here these next few weeks. First off, obviously this January WASDE report. What do they do with ending stocks? Where do our supplies kind of end up to give us an idea of what we're working with here for 2024? And then secondarily to that, it's South America's weather. And it's plain and simple, is Brazil catching rain? If they're not, we probably see the soybean meal market turn back higher on us, which is why as we drop below 400 here, we're being pretty cognizant of that, looking to get purchases made and looking to protect our top side for buying in the future.
All right, Ryan and Brandon, thank you so much for joining us today. That's going to be a wrap for today's show. Thanks to the stats crew at EverAg Insights for the data and graphs, and thanks to the EverAg media team for making us look good. Last but not least, thanks to our viewers for tuning in. As Jim likes to say, we love your feedback. Contact information is on the screen.